Welcome to Smart Stock Watch. Today is November 6th, 2024, and we're diving into the latest earnings report from Howmet Aerospace. Joining us is John, our Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Howmet Aerospace's third quarter 2024 results, which show significant growth and strategic financial maneuvers.
Revenue and profitability overview. Let's start with the top line. Howmet Aerospace reported a revenue of $1.84 billion for the third quarter of 2024, which is an 11% increase year over year. John, what are the key drivers behind this growth?
The growth is primarily driven by a 17% increase in the commercial aerospace sector, which offset a 12% decline in commercial transportation. This sector's performance is crucial as it reflects the recovery and demand in the aerospace industry.
And what about profitability? Howmet's net income rose to $332 million, with earnings per share at 81 cents. How does this compare to last year?
That's right. Net income increased significantly from $188 million in the same quarter last year, and EPS rose from 45 to 81 cents. This improvement is largely due to operational efficiencies and a strong focus on high-margin products, which boosted the operating income margin to 22.9%.
Operational efficiencies and future outlook. Howmet Aerospace has also reported an adjusted EBITDA of $487 million, up 27% year over year. What does this tell us about their operational efficiencies?
This increase in adjusted EBITDA, along with a margin expansion to 26.5%, indicates that Howmet is effectively managing its costs and capitalizing on its core strengths in aerospace. The company generated a record free cash flow of $162 million, showcasing its robust cash management.
Looking ahead, Howmet has provided a preliminary revenue guidance for 2025, expecting a 7.5% increase. What factors are contributing to this optimistic outlook?
The demand for commercial aerospace remains strong, driven by a backlog of aircraft orders and the need for engine spare parts. Additionally, Howmet's strategic debt reduction of $282 million this quarter positions them well for future growth, reducing interest expenses by $33 million annually.
Strategic initiatives and market challenges. Howmet has been active in strategic financial maneuvers, including $100 million in stock repurchases and a 60% increase in dividends. How do these actions reflect on their financial strategy?
These actions demonstrate Howmet's commitment to returning value to shareholders. The stock repurchases reduce the number of shares outstanding, potentially increasing EPS, while the dividend increase signals confidence in their cash flow and future earnings.
However, not everything is smooth sailing. The commercial transportation sector saw a 12% decline. How is Howmet addressing these challenges?
The decline is attributed to weaker market conditions in Europe and the impact of the Boeing strike, which has now been resolved. Howmet is cautiously optimistic about a recovery in this sector, particularly as Boeing resumes production.
Segment performance and leadership insights. Let's delve into the segment performance. The Engine Products segment reported a revenue of $945 million, up 18% year over year. What are the highlights here?
The Engine Products segment benefited from strong demand in commercial aerospace, defense, and industrial markets. The segment's adjusted EBIT margin reached a record 32.5%, reflecting efficient operations and strategic market positioning.
How about the Fastening Systems segment, which saw a 13% revenue increase?
This segment's growth is driven by the recovery in wide-body aircraft demand. The adjusted EBIT margin improved to 26%, showcasing Howmet's ability to leverage its expertise in aerospace fastening systems.
Finally, what insights did CEO John Plant provide regarding Howmet's future?
CEO John Plant expressed confidence in the robust demand outlook for commercial aerospace and defense markets. He highlighted the company's strong balance sheet and strategic initiatives, which are expected to drive growth in 2025 and beyond.
Key takeaways. In summary, Howmet Aerospace has delivered a strong performance in the third quarter of 2024, with significant revenue and profitability growth. The company's strategic initiatives and positive outlook for 2025 make it an attractive prospect for investors.
Absolutely. With a solid financial foundation and a focus on high-growth markets, Howmet is well-positioned to capitalize on future opportunities. Their proactive approach to debt management and shareholder returns further enhances their investment appeal.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Howmet Aerospace's performance in the comments below.